Good evening, everyone. A warm welcome to all of you. Thank you for taking the time to join this insightful session on BFSI landscape in India. How India's financial ecosystem is creating new opportunities and reshaping access for millions. My name is Akila, and I'm pleased to host today's webinar on behalf of our organization, Avanzo Cyber Institute. Before we move ahead, participants who have not registered through our official registration who will not be able to receive the participation certificate. So I'll be sharing the registration link in the chat box. Please make sure you fill it. Today we are honored to welcome our guest speaker, Professor Sunder Korivi, sir. He is currently the adjunct faculty at the Indian Institute of Corporate Affairs and has previously served as the founding dean of NMIMS. He has also contributed to several national bodies in the BFSI and education ecosystem and has held the key roles at Business India, Data Industrial Finance, and Axiom Bankers. We are privileged to have you with us today, sir. Thank you for joining us. Before we begin, please keep your microphones muted throughout the session and we will have a question and answer session at the end. So you can unmute and interact with the speaker at that time. Cameras are optional. Now, with great pleasure, I invite Professor Sundaram sir to lead this session. Sir, the platform is all yours.
Thank you, Akila, and thank you to Avanzo for giving me this opportunity to present my thoughts. My area of expertise is the BFSI sector, and at the end of it, last 15-20 minutes, we can have a Q&A session. And I leave it to yourself as to how cybersecurity applies to this sector. We know that it's now the budget what we say budget preparation time for the government of India, and the ministry is already calling various representatives to. Just a minute, let me share my presentation. Is my presentation visible?
Yes, sir.
Okay, just a minute. So at the moment, the Ministry of Finance is having its pre-budget consultations, and a lot of effort goes into that, wherein the various ministries present their request for grants, and those go into the budget. And you will see on the budget day on 1st February, the government presents a slew of schemes, and these schemes are meant for the benefit of the public. It is meant for the intended beneficiaries, and if these schemes are not well utilized, it is such a sad thing, because schemes are not utilized because proper awareness is not there, or they go to the unintended beneficiaries. So the objective of this session today is to give you a panoramic view of the BFSI sector, particularly from the view of financial inclusion, and we get a flavor of how the government schemes fulfill some of the needs and aspirations of the people, and how the private markets fulfill the BFSI needs of the participants. And then we have the middle class, which we call the missing middle, which is sometimes neither included in the schemes for the poorest of the poor, and they are also excluded from the particular schemes from the private sector, which are left for reserved for high net worth individuals. So, how to bring in that balance? I shall also bring to fore some misconduct in the BFSI sector. Hopefully, these should be ironed out. So, when you start accessing these government benefits, you are exposed to cyber threat. That's another issue. Okay, so first of all, you integrate your mobile phone and your PC uh, to the gateway, which is the BFSI sector, and you avail of various services and benefits. But at the same time, you are open to cyber threats. So that is the background of my discussion today. Now, there is some jargon to be deciphered. People use these terms like financial awareness, financial literacy, financial capability, and financial inclusion. These terms are used interchangeably, which leads to a lot of mistakes and misallocation of resources. So, let me clarify, financial awareness is just being aware of the do's and don'ts. And if you have a requirement, you know where to go to seek your clarification. That is financial awareness. Financial literacy opens up the range of products. That is opening the cupboard. Okay. For example, you may need a banking product, or you may need an insurance product, you may need an investment product, or you may need a pension product. Okay. So you know what is the whole range of products. That is financial literacy. Financial capability is having a source of income and being able to save something from that. So, first you become a saver, and then you become an investor or a consumer of financial services. And last but not the least, financial inclusion is access to products and services. So, we know awareness, literacy, capability, and inclusion. Now we know these terms separately. But it is also necessary, and this goes to the regulators and policy makers as well, that there are a lot of awareness campaigns. Okay, for example, RBI says Jagrit rahiye, satark rahiye, and mutual funds sahi hai, and insurance. IRD also promotes a lot of awareness campaigns, so people are aware, broadly aware. But when things remain there at the awareness stage itself, you're not really moving forward. Inclusion doesn't take place. People don't join the formal financial ecosystem. So also literacy. You may conduct financial literacy programs for school students. You may conduct financial literacy programs for college students. But at that time, they are not earning and they are not able to save. So that financial literacy knowledge just evaporates due to lack of use. So again, one intervention is required once they are financially capable. For example, when employees are onboarded into a new company, somebody there must counsel them that initially you may have to use your earnings to repay your loans, but try to save something and build a retire plan, save for your home, save for your health requirements, save for your future growth, etc. So the awareness and literacy really becomes more useful and more potent when they are having financial capability. Similarly, one nice example I'll give you, there was a manufacturing company, and a very senior citizen from the labor class, he retired. Okay, he was a loader in the factory, and he retired after 35 years of service. And the senior management felicitated him with a long service award. They gave him his gratuity check, his leave encashment check, and all his terminal benefits. And then a group of them sat with him in an office, and they told him that this lump sum money which you are getting is 35 years work and not one day's work. And they gave him some free financial advice, telling him how to utilize that money to create a nest egg. Now he was very fortunate, but not everybody is. The moment you get a windfall, you are attacked from all sides, and then a lifetime of savings get dissipated. So awareness, literacy, capability, and inclusion necessarily in that order. And I've tried to demystify and unbundle each of these. Now let me give you a panoramic view of the BFSI landscape. There are three elements here. B means banking, FS means financial services, capital markets and related activities, and I means insurance. That's the BFSI sector properly introduced to you. And in India, we have sectoral regulators. Okay, we have banks, non-bank finance companies like Muthoot and Manappuram Finance and Shriram Housing Finance, Shriram Transport Finance. Then we have distinct housing finance companies like Sriram Housing Finance. We have Avas, Aadhar Housing Finance, Sundaram Housing Finance. These are all under the purview of Reserve Bank of India. So essentially, banks, NBFCs, and HFCs, which cater to the credit markets, that is giving of loans, that comes under the jurisdiction of Reserve Bank of India. Then the market for listed securities, stock markets, stock exchanges, depositories, and all those regulated intermediaries who help you or assist or catalyze the processes in the capital markets, like the merchant bankers, stock brokers, credit rating agencies, etc. They are all regulated by SEBI. Then we have the insurance sector, comprising of life insurance, non-life insurance, health insurance, which was earlier part of general insurance, but now spinning off, we have standalone health insurance companies. They're all under the purview of IRDAI, Insurance Regulatory Development Authority of India. And pensions, particularly the government pension scheme called NPS with all its variations, comes under the regulation of PFRDA, Pension Fund Regulatory Development Authority. We have a siloed approach. There are two more regulators, but I'm not covering in today's session because those are more for the business and business restructuring. One is Insolvency Bankruptcy Board, which is for business restructuring, and one is IFSC, International Financial Services Authority, which is in Gift City. So I kept it out of the purview because today financial inclusion particularly deals with individuals and their savings and investments and not covering business. Now let us go a little more deeper into the regulatory landscape. Each of these bullet points here will open out into a new vista as a separate slide so that you will know the scope and sweep under the purview of each regulator. So as I mentioned, the Reserve Bank of India, it has under its purview banks, financial institutions like NABARD, EXIM, SIDBI, National Bank for Infrastructure Development, NABFID, okay, India Infrastructure Finance Corporation, and housing finance corporations, housing finance companies, and the NBFCs and housing finance companies and banks are responsible for the behavior of the direct sales agents appointed by them. Okay, so the DSAs engage in any misconduct, it is their sponsor banks who are the principals acting, and they are responsible for any malfeasance. Chit funds, credit information bureaus, the likes of Civil, TransUnion, etc. Account aggregators, that's a new profession for some of you youngsters. Then business correspondents or business facilitators, BCBF. For example, in Assam and Bengal, there are a lot of these tea gardens, and there are these people employed as laborers in the tea plantations. They may receive daily wages, and they don't have access to any bank because it may be in a remote area, not even in a district headquarter, and they cannot avail of regular banking facilities. They are not so familiar with internet based banking, internet may not work, etc. So you have these banking correspondents with these devices who go to them and act as on the spot ATMs. They accept money for savings, they dispense money. It's based on the Kenyan model. So that's business facilitators, business correspondents. Account aggregators are people who will take your consent from you when you apply for a bank loan or NBFC loan from any organization with which you do not have a regular banking account. So you will authorize them to transmit information from your bank to, let's say you're applying for a housing loan to HDFC Bank, and your regular bank is with, let's say, ICICI Bank. HDFC will ask for your KYC details and other details. So you are working in office, you don't have the time. So you authorize an account aggregator who works for HDFC Bank. He will access your bank, collect the details after your consent, and then he will put it across. Okay, so account aggregators. Why I'm saying this is because there are a lot of youngsters in this audience who may look for careers, even entrepreneurial careers. You can act as an account aggregator or business correspondent or business facilitator. Having said that, we move to the next regulator, which is SEBI, Securities and Exchange Board of India. Now, here the system is slightly different. You will appreciate when you are applying for a loan, you approach a bank or an NBFC and they give you a loan. But in the case of stock market, the situation is different. You may want to buy the shares of Larsen and Toubro, but you're not dealing with Larsen and Toubro. You are dealing through a broker who is regulated and registered with the stock exchange, who is regulated by the stock exchange, and stock exchange in turn are supervised by the Securities and Exchange Board of India. So basically, a dispute can come with your broker, not with Larsen and Toubro. Okay, so either you give the money and you don't get the shares, or you sell the shares and you don't get the money, etc. So in this way, the stock exchange will mediate and see to it that the broker faces the necessary disciplinary action, and the settlement trade guarantee fund from of the stock exchange will compensate you. So that brings credibility to the system. So there are a lot of intermediaries or facilitators. Okay. Stock exchanges help companies' shares to get listed so that secondary trading can take place. Then there are depositories which keep a track of your holdings, and based on that, companies access that and see who's the person holding the security on the date of the AGM or the date on which benefits are granted, for example, dividends, bonus, stock split, etc. Then there are mutual funds. You don't have to invest directly. You don't have time to invest directly. You're not an expert. No problem. You hand over your money to a mutual fund who's a money manager, and they will do the job for you. For high net worth individuals, there are alternative investment funds. They give their money to these AIFs. These AIFs act as venture capitalists or PE firms or hedge funds, and they invest on your behalf on the basis of revealed trading strategies. They're all regulated by SEBI, which gives a lot of comfort. Why do you need a financial regulator? Is that because in case of a dispute or a complaint or misconduct or malfeasance, you have a regulatory body who will take disciplinary action against those people. Okay. And there are collective investment schemes, which we shall not discuss today in detail. Then there are merchant bankers who help corporations to access the capital markets. Basically, they are like wholesale brokers. Debenture trustees, when companies issue bonds, the debenture trustees see to it that the money is arranged for 3 4 days before every interest payment or redemption. They will also see to it that the assets are properly hypothecated or mortgaged in favor of the debenture holders. Then there are registrars and transfer agents. In the case of a death or a change of legal status of the owner, you go to the registrar of and transfer agent who will do the necessary paperwork. There are credit rating agencies which keep a tab on the debt instruments issued by various companies and provide a rating, for example, AAA, AA, single A, triple B, etc. And safe investors will invest on the basis of AAA, and more adventurous investors can look at AA and single A as well, because the interest rates may be attractive and higher. Then we have researchers. There are analysts who deeply study companies and their securities, and they sell their services to individuals, but particularly to mutual funds and institutional investors. Then there are people who are KYC registration agencies. Okay, that when you go to the second investment, if you are already KYC registered through a registering agency, then the second mutual fund or the third mutual fund can directly collect your details uh, from your KYC registration agency. Okay, then there are mutual fund distributors who are the last mile connectivity. So at the mutual fund, you have a pyramid system where the chief investment officer and the treasury manager, they pool the funds and they invest. But as the pyramid grows at the bottom, it's all distributors. The distributors help in selling the mutual fund schemes, and also in case somebody wants the money, they will take care of the resale. That is the redemption of the mutual fund. So more like a bank which is converting savings to investment, investment back to savings and to cash. So the securities markets consist of the space of listed companies where the investment can be locked up, and it can give you investment several after several years it can give handsome gains, but at the time liquidity is required, it can be sold and you get your money T plus 1. The day you sell the share, next day you get your money. The day you buy the share, next day you get the shares in your depository account. So this liquidization of savings and investment is the main function of the securities markets, and SEBI is its regulator. Then next comes the insurance sector, where you have three distinct streams of business. One is life insurance, one is general insurance, which is non-life, and you have health insurance, which can be either run under a general insurance company or on a standalone basis. But this is changing. Now, IRDA is contemplating a total change in the structure in which insurance business is done. They may issue composite license. For example, if you're having a relationship with LIC and they know your life history, then it is best to take your health insurance also from them so that the duplication of the effort is not required. Makes sense? So, and they can also provide insurance policy for your mortgaged house. Okay, you've taken a housing loan, and you can take a special term policy which covers the proceeds of the loan which you've taken, so that in case of death of the borrower, the insurance policy proceeds can be used to pay off the housing loan. So composite insurance makes sense. Now there is another slot which is not mentioned in this slide, that is reinsurance. That is the insurer's insurer. So there is a hub and spoke model globally. So in India we have GIC Reinsurance, which buys wholesale insurance policies from other insurance companies, both life and general. So therefore, what happens is they get a diversified portfolio. So now what the IRDA is saying is reinsurance license is separate and composite insurance license will be separate. So we have 50 odd life and non-life insurance companies in India. All of them can do their reinsurance in case they require with GIC reinsurance. Similarly, GIC reinsurance can reinsure further in the global markets. So this way the risk gets transmitted and distributed across the globe. Now, between insurers and customers, there are other facilitating agencies such as insurance agents who will come to your doorstep and provide you the information and submit your policy proposal, get you your policy, and some of them even help you in following up in the time of claims. Okay, then there are insurance brokers who work on behalf of corporates and looking at the risk profile of various corporates. Some will be more fire insurance prone, some will be more flood insurance prone, some earthquake prone, some may be fire prone because of hazardous chemicals, etc. So these are specialists. These insurance brokers are specialists. They will do a risk survey of the company, and then they will go to the various insurance companies, get competing quotes, get competitive quotes, and they will give you a custom designed insurance policy. That is insurance brokers. Very prevalent in the marine insurance, especially export companies who constantly have cargoes. They resort to insurance brokers saying that, okay, this particular consignment, this material, this route, okay, get me the best deal. Then there are actuaries who design the insurance policies and do a pricing, saying in such a way that the insurance policy is neither loss making for the insurer nor loss making for the investor or the insured. Okay, so actuaries design various products, and in case of a claim, the claim is received, and the insurance company will appoint a surveyor or a loss assessor who will look at the feasibility or look at the legality of the claim and recommend the payment. So next, I'll take questions a little later. So let me give you a panoramic view first. Then there is the other part, which is pensions. Okay, there are several pension schemes, but the one which is regulated by PFRDA is the national pension system. So the national pension system has got several verticals. Some of it are open to government employees. Some of it is open to private sector employees also, with generous tax benefits. And the recent development is that the government has recognized that there are a number of gig workers who are self-employed, and they need to have a regular pension plan. So PFRDA has initiated what is known as NPS, National Pension System, which is a very low cost, low premium contributory scheme. And so the NPS mobilizes the funds, and the funds are handed over to various asset management companies on a competitive basis. These asset managers manage the investments, provide a return, and they work for a fee. So HDFC Asset Management Company, SBI Asset Management Company, some of these five or six renowned asset management companies, they handle the NPS funds for the government of India, for NPS. And in the scheme document, the subscriber can choose the asset management company, and he can choose the schemes as well. You want your pension money to go only in government securities, or corporate bonds, or equity, or a mix of the three. So you have flexibility in the instrument, the deployment of the scheme. You also have flexibility in changing the asset manager every year. So this is something which was not there in India prior to the year 2000. We had only government schemes and PPF, but NPS also gives you exposure to the capital markets in case you need it. Okay, then we shall look at, having seen this, we now go to other regulatory aspects. As I said, there are four regulators which we talked about. Now, the question before us is, in case there is a crisis in any one of the jurisdictions, for example, if there is a crisis in the banking system, for example, Yes Bank, for example, IndusInd Bank, does it create a panic in the overall financial system? The answer is yes. If Yes Bank was affected in a crisis, which was of their own making, then what about their subsidiary called Yes Securities, which is a broking firm which is regulated by SEBI? So when you have these financial conglomerates across the jurisdictory architecture, then a malfeasance in one jurisdictional area will affect the public perception of the other, and there could be a panic. So for inter-regulatory coordination, there's an organization called FSDC, Financial Stability and Development Council, where the finance minister is the chairperson and the governor of RBI is the deputy chairperson, and the heads of all the other regulatory bodies like IRDA, PFRDA, and SEBI are also members, so that they take an inter-regulatory view of things. Okay, and in the context of today's lecture, the Financial Stability and Development Council uh, sponsors an organization called NCFE, National Center for Financial Literacy, so that all the four regulators, they provide financial literacy across the silos. So the financial literacy there gives you a broad-based view of the various products and services. Now, grievance redressal. We have a Consumer Protection Act which also covers financial services. But the first port of call would be the various organizations. For example, in the banking system, there is an ombudsman system where if you're not happy with the explanation or performance of the bank, you can put your complaint to the banking ombudsman, who is a neutral person. Okay. And on the IRDA and PFRD also, there is an ombudsman. So you can send your query by email. The ombudsman will call the concerned company whom it regulates, and such a call will not be taken lightly, because an adverse comment from the ombudsman can actually put the license at peril and heavy penalties. So the ombudsman system is prevailing under RBI, IRD, and PFRA jurisdiction. But in the SEBI jurisdiction, we follow a different system. Earlier, there was an ombudsman system, but now what happens is all the stock exchanges and depositories, they are supposed to have an arbitration council where They appoint retired judges or lawyers or ex-bankers or chartered accountants, and they call both the parties at the dispute, and they give their adjudication, and that has helped in settling a lot of matters there. So this is the system which has got a pre-designed grievance redressal mechanism. This is very important in terms of the context of today's session. Now we have the development work is done by the ministries, where actually funds are put out by the various ministries of the government of India. So our first point of contact in financial inclusion vis-a-vis the government of India is in the Ministry of Finance. There is a Department of Financial Services, DFS. Look at the left side. In the Ministry of Finance, there is a Department of Financial Services. This Department of Financial Services runs four flagship programs. One is the Jan Dhan Yojana. The formal name of it is Basic Saving Bank Deposit Account. Basic saving bank deposit account. Okay, one need not maintain excessive balances there. Okay, and I'm not going to the details of the scheme, but I'm telling you that these are the things available. A lot of people who did not have bank access to banking services, they got their accounts under Jan Dhan Yojana, because otherwise what happens is I go to have my shoes repaired at a roadside with a roadside cobbler, and I pay him cash. I cannot pay him in any other way because he does not have a bank account. So having a bank account at the back end, which is Aadhaar linked, etc., and mobile linked. Okay, I can flash my phone and he gets a confirmation on his phone. And at the end, the bank, his bank account is receiving the money. So that is the beauty of the Jan Dhan Yojana. This formalization of the economy has also expanded the GDP in a way. Let me tell you how this works at the economic level. Is that if I'm a banker and if I have all these cobblers and street vendors, etc., who are having their Jandan accounts with me, and through that account they are receiving payments from their customers, then over a period of 1 month, I know how many dosas or samosas they are selling, how many shoes they are selling or repairing, okay, how many teas they are selling, etc. And on the basis of that, I can also give them credit because the installment can be deducted from his daily collections. So this has led to a huge explosion in the formalization of the economy. Then Atal Pension Yojana is a low-cost pension plan for the very poor people. Jivan Jyoti Bima Yojana is a low-cost life insurance scheme, and PM Suraksha Bima Yojana is a low-cost accident insurance scheme. Okay, so these are some of the financial inclusion schemes. I'm not discussing the details of the scheme, but these schemes are available to the general public. And at the back of it, holding everything solidly like a spine, is the Jan Dhan Yojana. So that if I know you have an Aadhaar and a mobile number, okay, I open your bank account. And if I know your bank account, okay, then as a pension provider, I can provide you pension, I can provide you general insurance, I can provide you life insurance. Okay, so these are the initiatives of the DFS. There are other ministries also that have added to the financial inclusion movement. Okay, this was a big start. Okay, then apart from this, what happens is we have other ministries. Ministry of Information Technology has recognized several common service centers, CSC, across the length and breadth of the country. Now, this is amazing. You must have seen some of it in Mumbai or some of it in the major cities. There are these Xerox shops, and some of them have this board called CSC, Common Service Center. This is for people who are not very literate in using the mobile apps. Okay, so these common service centers have these trained people, and you can tell them that you want to apply for a PAN card, you want to apply for an Aadhaar card, you want to apply for any of the schemes that have been mentioned in the previous slide or any other government scheme. So they help you with it, you know. So they will tell you what documents to bring, your residence proof, your electricity bill, okay, your PAN card, etc., if you have it, So they will help you in offering this is these common service centers are meant for the nodal point for the outreach of the government services to reach the people. That is CSC. If it is useful in towns, then imagine the usefulness of this in the rural areas and the district places. Okay. Then PM Awas Yojana, two versions, urban and rural, Gramin. Okay. That is a benefit, financial inclusion scheme for those who do not have an existing house. That is MOHUA under Ministry of Housing and Urban Affairs. Then the Ministry of Health and Family Welfare under the National Health Authority, they've offered a health insurance scheme, Ayushman Bharat, which is up to 5 lakhs. Okay, now we are not talking small things because if I go to the previous slide, I'm talking about banking, insurance, pension, life and general insurance and pension. Then on top of that, I am helping them to get access to all these services and other government services through Common Service Center. Then Ministry of Housing and Urban Affairs is offering you a house at a very sometimes free houses for the very low income group and sometimes subsidized housing loan for small houses as defined in the schemes from time to time. And the biggest bane is one hospital bill can ruin your financial stability. So you have Ayushman Bharat scheme. As if this is not good enough, there are several other initiatives. The tragedies people do not even know about it. For certain types of education and for certain types of deserving students, there is Vidya Lakshmi and there is central sector interest subsidy scheme, which is for scholars for studying for various courses. Now, education may include higher education as well, but what India needs is a lot of vocational and job-oriented courses. So we have a ministry which is Ministry of Skill Development and Entrepreneurship, MSDE, which is distinct and different from the Ministry of Education. And there are a number of schemes called PM Kaushal Vikas Yojana, where you can enroll for a scheme, you get trained, and you may get absorbed also by the organization which is training you. So this is again another financial inclusion initiative. Moving further, the regulators are not left behind. Now, some of these regulators have also started development oriented schemes. Okay. Now, one can invest directly in government securities. Earlier, what used to happen was we could invest in Indira National Savings Certificate, National Savings Scheme, Indira Vikas Patra, Kisan Vikas Patra, this postal life, postal scheme, etc., etc. All that could be consolidated by just buying one security, which is a government security, either 3 year, 5 year, 7 year, 10 year, depending on the longevity of your savings. So what happens is you can buy government securities through the retail gilt account and you can sell them and you can get the money. So what happens, it benefits the government also that all these fragmented schemes are supplanted or substituted by a government security scheme where you have large banks and institutions also buying and selling, cooperative banks, mutual funds also buying and selling GSEC. You also have the access to the same market. So just like the capital market, and NSC has limited liquidity. You have to go to a bank and pledge it. But in the case of GSECs, you can accumulate a lot of GSECs during your period of heavy savings and investment. And at the time when you need money, just like you sell a share or mutual fund, you can sell your GSEC. Okay. Then there is, as I mentioned to you, the business correspondent and business facilitator. This is for people working in remote areas as tea garden workers or plantation workers or mining workers or those working in oil fields, etc. Then basic services demat account. This is to bring people into the capital markets. Okay, if some of you may remember, there was an IPO of Coal India Limited. At that time, many organizations like SBI Caps and IDBI Caps, they went around and they made people open demat accounts so that they could invest in Coal India Limited. And later on, these people would become regular investors in the capital markets. So governments have all over the world have major disinvestment programs, and they can use these disinvestment programs to kickstart more people to open demat accounts and therefore help in the development of the capital markets. There are many people who have invested in mutual funds, but they lost the certificates. It is kept in some cupboard, got misplaced or mutilated during shifting or transfer, etc. So they've started a mutual fund investment tracing and receival assistant called Mitra. Okay, then SEBI has a complaint redress system where all complaints can be sent to SEBI complaints redress system, which is called scores, and SEBI will transfer these complaints either to the mutual funds or to the stock exchanges or the depositories and ask for a resolution within a given period of time. So SEBI monitors these. IRDA has opened a platform called Bima Sugam, which will help you to look at all the insurance policies of various companies. So insurance companies are encouraged to put their products on the Bima Sugam platform. So it is like a mall, like an insurance mall. NPS I mentioned to you briefly in the past recently, and NPS Vatsalya is where a parent can or a guardian can open an account for his son, daughter, and keep contributing till they are 18 years old. Once they are 18 years old, the beneficiary is free to take that account further. Then we have some legacy schemes which I have introduced. These may not be new, but these I have put in this in the interest of financial inclusion. For example, we have postal life insurance. Surprisingly, postal life insurance is available not only to government employees but also to farmers, and it is open to some other categories also. So this is to mainstream people who do not have access to formal investment systems. Then some employees are covered under Employee State Insurance Corporation. Some employees are covered under Employees Provident Fund Organization. Okay, so these are some of the legacy schemes with extended coverage. As I said, there's a new labor code where gig workers will also get covered either under EPFO or under NPS. Now, finally, I come to the philosophy of this. We've discussed a number of schemes. Many of the schemes are inclusive and they are available to the lower strata of society. And the middle class, middle income group is excluded from this. Then, as far as high income groups are concerned, there are portfolio managers, there are wealth managers, family offices, alternative investment funds, etc., which cater to them. Okay, so the BFSI sector has got a low hanging fruit in the middle income group. They are the ones who need the loans in the initial stages. They are the ones who need the investment products once they stabilize. They are the ones who need retirement plans once they are close to retirement. Okay, so see these, but what actually happens is all these private sector players and some public sector players, they chase the high income group. Okay, so that is the tragedy, that lopsidedness has to go. Okay, so as I mentioned, filling the gap, lower income segments are eligible for many of the inclusion schemes. Some of them which I have not mentioned in this presentation, that Ujjwala gas scheme and the free ration, PM Garib Kalyan Yojana, etc. They are eligible. I think these ration cards are white ration card, orange ration card, etc. People like us are not eligible for that. But we have to see that it goes to the intended beneficiaries. The higher income group will never go for these subsidized schemes. They will not go for the Jan Arogya scheme, etc. They will go to Breach Candy Hospital and five-star hospitals. It is the middle income segment that now needs greater attention. This is my my call to attention for the people in the BFSI sector. Now, certain acts of misconduct. It's not all roses. It's good, but it can be better provided we stop or minimize these instances of misconduct. Misconduct is prevalent all over the world. And in India, I have seen three types of misconduct. I call it the cut, C-U-T, cut. C meaning how credit cards are missold. They courier a credit card to you even though you have not asked for it, and they'll charge you the joining fees at the end of the first year. And if the envelope comes in your house when you are outstation, they will show that it has been issued, you have used it for 1 year, and they will start charging you the joining charges and interest on interest on interest, and they'll blacklist you. Okay, that is one sort of, because the salesman there is a DSA. He gets his commission on the basis of number of people to whom he has delivered the credit card. Then in the insurance sector, so that's in the banking sector, malfeasance and misconduct by the agents of the banks. Then under incentivizing term policies, insurance companies, what happens is there it is an inverted structure. The insurance agents will tell the head office what to do, and they will bargain for the highest commission. Okay, and they want the products also to be designed, and they will promote those products where the commission structure is higher. So, not a surprise, since 1956, even after we nationalized insurance and then we partly privatized it in 1999, we are still underpenetrated as far as insurance concerned, because we have not settled this problem of the agents dominating the insurance sales. And of course they sell complex products where the commission is more. And of course there are cases of hospital medical insurance claims getting rejected. So now another new development in the insurance sector is they are asking for a separate health regulator to take care of the overcharging by the hospitals, the behavior of the agents, the non-settlement of claims by the insurance companies. Okay, so that is the second part. And T is trading is incentivized. Okay, most, if not all, people call themselves as investors, but actually they are traders. They are interested only in buying shares at 11 o'clock and selling it at 3 o'clock. That is not the intention of the capital markets. Liquidity is a lubricant and not the essence of it. Okay, well, the real wealth is made in the stock markets by staying invested. You have the patience to invest in a fixed deposit for 3 years, but in the case of stocks, why do you want to triple your money in 3 weeks? Okay, so investors are maturing now, and we hope that people's tendency to trade in stocks either in the cash market or through futures and options. It's like a learner buying a Lamborghini, so that's the misfit there. So these are just three types of misconducts. I'm sure if we dig deeper in the banking, financial services, and insurance, in all sectors, we'll get number of instances of malfeasing. That malfeasance and misconduct, that is a source of a topic for research for the academicians here. Then next I come to finally, what do you do? Okay, so if you're a first time saver getting into investment or insurance, you'll be bombarded with proposals. So you must seek professional advice from a chartered accountant or a certified planner, financial planner, or an investment advisor. You'll receive a lot of phone calls asking you for this document, that document. Tell them you'll meet them at the branch. Okay. So if they are curious, they will not come to the branch. Do not interact with unknown entities over phone or face to face. I'm talking about some of the security issues. Okay. Good housekeeping. So many people, they buy mutual funds, they buy fixed deposits, etc. But it's all kept in different cupboards. And when you change your house, you're not able to locate things, etc. Okay, use regularly weed out old papers. Okay, and organize your financial documents. Get a good storage space. Don't keep other unnecessary papers there. So one permanent place should be for permanent investment related things for ease of access. Then keep a tab on passwords. So security at its very basic level. The world's most common password is 12345678 or 9. Okay, so keep a tab on your passwords. Save important things on your DigiLocker. and make use of nomination facilities. That makes the transmission process more painless. Okay. Lastly, I'd like to say that there is a need to transition continuously with follow-up action, in the sense that you should do the entire society should engage in financial services, financial awareness. Sorry, satark rahiye. From there, we give them an idea of the panoramic view of the various products. Then we create an ecosystem where everybody is able to earn. Okay, so from literacy to capability. Once they are having ability to save, then they will be more receptive to financial literacy and thereby financial inclusion. So it is for all these four channels should work together. Right now, what we are seeing is these efforts are scattered. Okay. And last but not the least, the middle class population of India may be equal to or more than the entire population of USA. The middle class population of India may be equal to the entire population of USA. And if you look at the 30 odd states and union territories in India, some of them, Uttar Pradesh has the population of Russia. Okay. So think of the size of this market. And if you are in the BFSI sector, your next step should be simply to including the excluded. Okay, so this is a view I have given, a compilation or a collation of the happenings and goings on in the BFSI sector. Everybody needs financial access, and therefore, you are exposed to cyber threats, and therefore, institutes like Avanzo will tell you that yes, by all means, you should make use of these financial inclusion products, but with the guardrails of safety. With this, I have come to the end of my presentation, and I can take questions for the next 10 minutes.
Okay, thank you so much, sir, for this enlightening session. We will now open the floor for questions. Please feel free to raise your hand or type your questions in the chat.
Some of them have
Sir,
typed their questions, so
yeah,
can they just reiterate their questions in short so that I can take them out?
sir,
First preference is those who already typed. Yeah, yeah,
we have already got few questions in the chat.
yes,
First is from Mr. Shankar.
yeah.
Which area of BFSI do you believe holds the highest potential for future innovation?
All of them actually, but basic banking. Okay, banking is 50% of BFSI. Okay,
Okay.
so because when a person, let's say when a person earns his income either as his own small business or as a salary, first the money goes to the bank. Okay, then from the bank, some of it will go for his daily needs. Okay, so he will have to make payments. You need a payment system. Then some of it will go towards repaying installments for the loans which he has taken, and the balance is savings. So those need to be invested. Okay, so it's the bank which is the Gangotri, and from the banks you will have money flowing into mutual funds. Okay, 100% of the population needs banking. Okay, in advanced countries, the proportion of mutual fund savings to bank deposits is 50%. In India, it is hardly 6 to 8%. So most of the money is still in the banks. Yes. Next question.
Next one is from Rahul. What are the biggest cyber risks currently faced by banks and financial institutions in India?
Okay, basically, there are a lot of cyber attacks, some of them from within India, and many of them are from outside India. So, banks face cyber threats, and they have dedicated agencies who are helping them 24 hours. Okay, so on a daily basis, banks get reports saying that today you faced 25 attacks, today you faced 250 attacks, some of them get 1,000 attacks per day. Okay, so they have these professional agencies who help them in firewalling. Yes. Next.
Okay. Next is from Sanat. How do government financial inclusion schemes ensure that people not only open accounts but also actively use them?
Yes, that is a problem which is being seized by the government. But actually, that will be solved by market forces because today what we find is I'm from Mumbai and many people travel here and there by auto and taxis. So many of the auto rickshaws and taxis who do not have the GPay, they lose business. Okay, including small vendors and vegetable sellers, fruit sellers, etc. They lose business. So they have an account at the back end, and if they attach themselves to Paytm or PhonePe, etc., then they get business. Then the dormant account see some movements. Okay.
Okay. So the next question is from Risla. What kind of financial literacy programs would help the middle income segment the most?
For the middle income segment, you need these. They are already earning, so they are having financial capability. Okay, so financial literacy programs there are very fertile. So what happens is HR departments of companies, they organize literacy programs. Okay, then there are these defense personnel, retired personnel. Okay, retired school teachers. So for various the HR departments of various companies, government as well as non-government. Plus, many times what happens is the four regulators under NCFE, they take these initiatives in financial literacy. Apart from that, these stock exchanges and the mutual funds and the stock brokers, they also conduct various financial program literacy programs on their own. The best example would be Zerodha. All of you must have heard of Zerodha, the broking firm. They started a lot of financial literacy and awareness programs during COVID, and there were a lot of double income people who were sitting at home and doing work from home. The salary was coming, but they could not spend. No hotels, no movies, no tourism, no spending on clothes, etc. So they had a lot of money, and they could see that the stock exchange was operating. So he opened tons and tons of demat accounts during COVID, and those investors actually reaped the benefit handsomely. They entered the market when the market was at a very low level because of the fear of COVID, and then they reaped the gains. So today, many of the people who are having depository accounts in CDSL, it is thanks to Zerodha. So public initiative as well as private initiative will help in incentivizing the public. Yes.
Okay. Sir, next is from Kamal. He is
Yes.
asking about the role of CDBC in BFSI and how it will help retail customer consumers.
Okay. So there is a conundrum as to Bitcoin, whether it is an asset, etc. As a professor, I would say it does not meet the classic definition of an asset because an asset has to earn you income. For example, farmland will get you the farm produce which you can sell. Okay. A house can get you rental income. A bond can get you interest. A share can get you dividend. Mutual fund can give you dividend and returns. So Bitcoin is not an asset. So what happens is many of the central banks, they are promoting what is known as central bank digital currency. I'm not sure of the details, which is not a subject of this lecture, but the Reserve Bank of India is working on a central bank digital currency.
Okay. Kamal is asking, do you foresee CDBC becoming a currency in near future?
Yes, that is on the cards. That is on the cards. See, we do not know who controls Bitcoin and what is the mystery behind its valuation, etc. Or it's a black box. Okay, so the central banks have now come together and they said, let us have our own central bank digital currency. Okay, and which is the prevalent way of transacting in the cyber world. Okay, so they say, let's make it official, and it is a currency.
Okay.
Okay.
So I hope all of you got your answers. Okay. So I hope there are no more questions. We have
Good evening, sir.
this.
I have a question.
Yeah.
Yes, go on.
My name is Vikas Gopinath,
Yes.
and I have a simple doubt. Like, barring the banking sector, if you take insurance, say for
Yes.
example, life insurance, general insurance, or health insurance, or
Yes.
even broking, I mean,
Yes.
share platform, or in
Yes.
mutual fund platform. Can
Yes.
you tell me the top five cyber threats that can happen to these platforms?
That is not my subject, but I can tell you that all of them are facing cyber threats. All of them. Some of those sites are from outside India. Okay, it may be just simply to paralyze your network. Okay, Avanzo is the specialist in this field, and they will have sessions on that.
Okay, sir. Thank you very much, and
Okay,
thanks for a nice presentation.
thank you, thank you, thank
Okay.
you,
So, on behalf of the entire team, we express our sincere gratitude to you, Sir Professor Sundaram Korivi, sir, for sharing the expertise with us today.
thank you,
And a special thanks to all the participants who are attending and contributing to this webinar. Please remember to fill out the registration form that we have shared in the chat box to receive your participation certification, and we will share the feedback link. Kindly take a moment to share your experience with us and wishing everyone a wonderful evening ahead. So, thank you. Thank you all.
thank you, thank you,
Thank you, sir.
Thank you, sir.
thank you.